Hello and welcome to July 13th. Alpha's gold at 15%, but we still got some bad news on the overall strategy. We have now at minus 0.68 versus the SPY at 17.6. Here's the proof of the SPY, and there it is, 17.6 year to date daily total return. So, like I said before, if your trading strategy can't beat the SPY, why bother? Seriously. I'm doing a lot of studies on this for the last several years, and maybe some of the old gurus were right. Well, we'll see. We still have another 6 months to pull this out of the hat. After that, come January 2022, we'll see where we go from there. Moving on. So here we are at gold at 15%, and we are past our entry point. So right now we're a bit in a flat zone. So we had a nice small rally here. We now have what they call accumulation here. But you see the value in the RSI, MACD and the MACD histogram are going into good positive territory. So we just ride this out. This is a DTE, which means we are going to November 167. And 167 is somewhere right in here. 167 was our strike price. So we need to be about 167 come November. And there are some escape clauses that I do have to go over. And that is that if this was to zoom, whatever reason, I've seen it. If ever zoom and hits that 10 to 1, I'm out. Hits 10 to 1, I'm going last bar low and I'm taking that money off the table. So that's the anticipated plan. This option cost us $6 right there. Okay, that takes us now to Monster, which joined us in yesterday, holding at 8%. And that one there cost us $4. So we were anticipating 420, and we got in at $4. That's nice. We got a little bit of a discount, not much, but everything helps. So there it is on Monster. And no, it has not cleared the gantry yet, so we're still going to be in need of getting cleared that gantry to get that EP stop. This is STO's trending. That's another thing that's happening now too in the back room, and that is going over the STO's three strategies. STO Prime, which is just the indicators down below. STO with the indicators down below with the price closing above the 10 EMA, and then the STO trend, which is that the 10 EMA is also trending in the direction of the stochastic, because we do run the scanner for the put side. So, excuse me. So there we are for that report. That takes us on now to PG, and PG is they cleared the gantry already, and it's nice to move it. Now it's starting to go in a little bit of flat zone. Our stop is here, and there's our 3 to 1 up there. And the escape clause will be is that we are going to go to the get 10 to 1, we're out. Some discussion has been brought up about the idea of DTE and getting out or going to last bar low if you're not at target by the end of 30 days. Well, that sort of defeats the purpose of DTE then. We just might as well stick with any profit exit will do. The problem, of course, with any profit exit will do is getting enough profit exit to overcome losses. Now, I did do a review here about the stops put at EP. That has helped already in somewhat. So that is good. I went and reviewed some of the exits of this July, and the percentages were the biggest loss was the minus 32%, and the smallest was the minus 9. And we had 4 exits already this June, but they were all negative exits. Okay, EWJ is at 0. It is at break even, and there isn't much there we can do. It is pretty wide in consideration, but we have to respect that swing low. This is where the sellers got pushed back by the buyers, and sellers and buyers are the same people. They just sold up here, grabbed their profit, waited for it to drop down. Look, this is almost a $3 profit right there. They waited for that $3 profit, and if you multiply that times thousands of stock shares, and also multiply that times thousands and thousands of options, that is a pretty penny. I mean, this option did oh, we got to put in the how much this option cost us. This option cost us 445. So again, we got a little bit of a savings. We were anticipating 451 and got 445. Okay, cool. All right. Now going on to our next situation, and sorry about that. Okay, so moving on with the EWJ, the ETF for Japanese economy. It's maybe it's hit a bottom here, and maybe on that way up. And this was a close above the 10 EMA. That's how we found this when we ran our scanner. All right, moving on now to, there is something I do want to point out. I believe it's T. Remember yesterday I pointed out that we had a, okay, it is T. Here's what happened again, because I was such in a mindset of talking about the DTE strategy, I completely forgot to put a stop here. And the stop that I originally put in was a day stop, which means at the end of the day, that stop gets canceled. The end result is that that stop got canceled. It got canceled right here at the next day, but I never went back and put it back in again. So the result is this is definitely be a DTE to see where it's going to go. It's AT&T, and now that the economy is opening back up, and AT&T has got their studios, Warner Brothers, to fill their pipeline with content and also fill everybody else's content. We'll see how it works out. All right. That said, let's go on now to scanner time. I like scanner time. Scanner time to me is my favorite part of this report. Let's just see what's going on. Okay. Oh, I know. There was something else too. It's too late now. We're running out of time here. Okay, let's go ahead and run our scanner. And in our scanner now, this is a dipper strategy being used in one of the other accounts being used in Phoenix. So we are not going to be doing that. We're going to go load up our scanner for Uptrend scanner, and you see we have $772. What happened was one issue got canceled. I forgot who it is, but somebody got canceled, and I think it was RTX. And the result was that we ended up now with enough buying power for one more contract. So alpha uptrend and run it. And let's see what we get. Okay, nothing in the nothing in the stochastics uptrend. Let's go now and look at the stochastics downtrend, because we always play the both sides of the market. And the downtrend, alphas, and go. Alrighty. I need my scratch paper. Organize all my papers and forgot to keep my scratch paper out. Okay, there's nothing there either. So now that is my favorite STO scanner because it goes with the trend. Now we could and just stay with the trend scanner and don't take anything else. So because we want that high probability, I'm running all three scanners for July to eliminate one, which I'm pretty sure is going to be Stochastics Prime because it produces a lot of entries and produces a lot of exits, profit, lost exits. So now we'll go ahead and load up. You know what? Since we're here, let's give you guys Stochastics Uptrend. And remember, I'm using lost leaders list, and the lost leaders list, the problem with the lost leaders list is if none of my lost leaders are in optimum position, then the end result is that I miss out on opportunity. So we're going to run the $5 to 40. This is where Bill Polish says, he says, this is where you get the best money, and you want stuff that has 2 million shares because you are seeing a limited on that, limited on using the lost leaders. So here we're going to go to the open market, all optionable, stochastics uptrend, and we have 2,362 qualifiers, and 860 qualify with 2 million in shares, and do it. And we'll leave it at that for today. And the answer is one. ATOS. So ATOS would have to be go looked at to see. And amazing, you know, look at that. That 2 million shares, $5.40, and only one qualified. Right. All right. But that said, let's go ahead and close out. Oh, let's, you know what? Let's go to ATOS and see how we would play it. If we had ATOS was in the open field, ATOS, and there, look, uptrending, and look at the 10 EMA. It's up and up, but you have a higher up than the lower up in the last month. So it's trending for the month. And look, we actually did a forward testing. We did a forward testing here, back on here, and this was probably, well, yeah, 10 EMA, close above the 10 EMA, everything in the other direction. Yeah, this would have been an entry right there, and then you would have taken profit right there on that third. And so let's go ahead and then go ahead. I'm going to leave that there because I always like to leave my old notes to see how in comparison. And we go with the top of the body to the swing low, right there, swing low. And the reason we go to the top of the body is because we don't want to be overpaying and get into slippage. Now, of course, if it has a gap, can't do anything about that. All right. Well, that does conclude today's report, and we'll be looking at ATOS and how it pops up. And with that, I thank you very much for stopping by and checking it out.